All right, let's get right into it. So, you've got a life insurance policy, and that's a huge, fantastic step for protecting your family. But is that standard out-of-the-box policy really the perfect fit? Today, we're going to pull back the curtain on a really powerful tool for customizing that policy, life insurance riders.
I want you to think about your policy for a second. That standard off-the-shelf policy, it's really designed to do one main thing. But, life is messy. It's full of twists and turns, and a basic policy might just have some serious blind spots. We're talking about gaps that could leave your family's financial safety net with huge holes in it right when they need it the most.
So really ask yourself this question: is that policy truly enough? I mean, when you start thinking about things like a sudden disability that keeps you from working, or a critical illness, or maybe needing long-term care down the road, does your current plan actually hold up? This is where it gets very real and very personal.
Okay, but don't worry, because there is absolutely a solution for plugging those gaps. And that solution is what we're talking about today, insurance riders. These are the tools that let you take a standard policy and really dial it in to tailor it specifically for your life. So what in the world is a rider? Well, it's pretty simple, actually. It's just an optional add-on. Think of it like a little amendment to your policy's contract that either adds or changes your coverage. It is the key to turning a generic safety net into one that is truly built for you and your family. Here's the best way to think about it. It's kind of like buying a car. The base model, yeah, it gets you from A to B just fine. But adding features, like all-wheel drive for icy roads or those fancy safety sensors, that gives you critical protection in specific situations. Well, riders do the exact same thing for your life insurance. All right, so where do we even begin? Because not all riders are created equal, that's for sure. Let's start with what I like to call the essentials. These are the ones that tackle really common, really significant risks that pretty much everyone should at least think about. We're going to zero in on two big ones that experts almost always point to as being essential for a lot of people: the Accelerated Death Benefit Rider and the Waiver of Premium Rider. Let's break down what these actually do for you. First up, the Accelerated Death Benefit, or ADB. This rider is incredible. It lets you access a chunk of your own death benefit while you're still alive, but only if you're diagnosed with a terminal illness. And as the expert Tony Stewart points out here, the best part is that it's often included for free. It gives you crucial cash for medical bills or whatever else you need, right when you need it. Now, let's paint another picture. What if something happens? You become totally disabled, and you just can't work anymore. Suddenly, that income you were counting on to pay your life insurance premiums, it's gone. What happens then? Does your policy just disappear, leaving your family with nothing? And listen, this is not some rare, far-fetched scenario. The data shows that about 3 in every 10 workers will become disabled at some point. That's a huge number, and it's exactly why the Waiver of Premium Rider is so important. If you become disabled, the insurance company just waives your premium payments, and your policy stays active. It's like a backstop for your backstop. Okay, so we've got the essentials covered. Now let's talk about riders that are more like upgrades for your future. These are for the planners out there, the folks who know that their needs are going to change over time and want a policy that can grow and adapt right along with them. This is the Guaranteed Insurability Rider, and honestly, it is a fantastic option, especially if you're younger. What it does is it gives you the right to buy more coverage at specific times in the future or after big life events, like getting married, having a kid, and you get to do it without another medical exam. You are literally locking in your good health right now to protect your future. It's brilliant. Okay, but what if you need a ton of coverage for a specific period of time, say to cover a 30-year mortgage, but you also want that permanent policy? This is where a term rider is such a smart move. Instead of buying a massive and super expensive whole life policy, you can get a smaller permanent policy and just layer a cheaper term rider right on top. You get the total coverage you need for a much lower premium. So we've talked about the essentials and the smart upgrades, but now we have to talk about the riders that you should be a little skeptical of. You've got to approach these with caution. Not every add-on is a good deal for everybody, and some of them really need a closer look before you sign on the dotted line. Let's take a look at the Accidental Death Rider. It sounds good, right? It promises an extra payout if you die in an accident. But the problem is, this thing is notoriously restrictive. There are so many exclusions. You're basically paying extra for coverage that only works under this very narrow, very specific set of circumstances. Most experts will tell you you're just better off putting that same money toward more base coverage, which protects your family no matter how you pass away.
And look, this quote from consultant Stephen Rothschild just nails it. The big problem is that the benefit depends entirely on how you die. And as he says, how do you know how you're going to die? You don't. Tying your family's financial security to a specific cause of death is a gamble, and it's probably not worth it.
And another one you'll want to put under a microscope is the long-term care rider. Now, it can be a way to get some LTC protection, but these riders can be incredibly complex. It is absolutely essential that you compare the costs, the benefits, and what actually triggers the coverage against a separate, standalone long-term care policy. You've got to see which one really gives you better value. So we've walked through the good, the great, and maybe the not so great. At the end of the day, the goal here is not to just buy every rider you see. The goal is to be a smart consumer, to build a policy that is a real safety net, one that is truly customized for your life and your risks.
So here it is. This is your action plan. This is how you make a smart choice and don't overpay. Step 1. Identify a specific financial risk, a shock. 2. Map that risk to a rider that actually solves it. 3. Get a quote both with and without that rider so you can see the real cost. 4. And this is crucial. Confirm the fine print, the definitions, the triggers. 5. Only keep what gives you meaningful protection. And finally, number 6, remember to review your policy every time you have a major life event.
Okay, to wrap this all up, here is your takeaway checklist. First, tie every single rider to a specific need. Don't just get it to get it. Prioritize those incredible living benefits like the ADB and Waiver of Premium. Use Guaranteed Insurability to keep your options open for the future. Don't pay for riders that are really narrow or just duplicate coverage you already have. And the biggest takeaway, an off-the-shelf policy might not be enough, but with the right riders, you can build one that absolutely is. And that just leaves us with one final thought. Now that you know the tools you have at your disposal, take a second and think about your own life, your family, your future. What does your ideal safety net? What does it really look like?